today's episode, we are diving into a timely and impactful topic. President Joe Biden's recent decision to release oil reserves in a bid to lower gas prices just in time for summer. We're going to explore what this move means for your wallet and the broader economy. We're going to take a look at some historical precedents and discuss the current state of the U.S. economy with insights on inflation, employment, and more. Whether you're hitting the road for a summer trip or just taking an eye on your finances as we look at the economy, you don't want to miss this deep dive in how these upcoming shifts affect you. So let's get started.
Welcome to the Financial Mirror. Where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
Welcome to the Financial Mirror, and thanks for joining me today as we continue to work to improve the one thing we can control, ourselves. Here at the Financial Mirror, it is not about the numbers and spreadsheets alone, but about transforming and educating you on money so that you can make smarter financial decisions. If this is the first time you are joining in, don't forget to hit subscribe on YouTube to be notified of all the new episodes as they release. If you are listening to this on a podcast platform of your choice, don't forget to like and subscribe to the podcast. If you're on Apple Podcasts or Spotify, leave a 5-star review and a written comment, as both go a long way in getting this information out to more and more listeners. So today we are diving into a hot topic. This is a current event topic, but let me tell you this. I'm going to talk about the oil reserves, but I'm looking at it more from a sense of, are we on the right track? Is the economy headed in the right direction? Just want to give you an update on where the economy's at, what I'm seeing, and give you some insight. Last week, we discussed the national debt crisis, what can be done, and I talked a little bit about the economy and where we at, what are we doing, are the numbers good, like all those things. And I kind of hinted at this episode this week, and I do want to cover the economy, but this all kind of stemmed from this oil reserve release of 2024. I know it sounds super like deja vu-ish because it just happened in 2022. So I'm going to cover that. I'm going to cover like, what does that mean? Like what is the underlying reason? Like all those things. But more importantly, I want to cover just an update on the economy because we haven't really discussed that in quite some time. Since inflation kind of peaked and started to roll back over. I think I may have done one economy update, and I do like to do those occasionally just to keep you in the know of what you should be on the lookout for. So today we're going to explore kind of the economy and what this means for your wallet and how this all ties into our current economic situation. So last week we focused on the debt. Today we're kind of looking forward, kind of looking at all those pieces, looking at the inflation, looking at the stock market, looking at a bunch of different data points, just to give you a sense of where are we at as an economy and what can you start to kind of glean from that, okay? So hopefully this is, like I said, is just an update and everything is lovely. But I do want to give you kind of some realism to what's going on. Talked about it last week, and I'm not going to say anything about last week again because I've said last week quite a few times now. But I did talk about that this is an election year. And the number one thing that I think that we need to take away from this is that a lot of wool is going to be pulled over people's eyes over the coming weeks and months, just due to the fact that it is an election year, right? So there's going to be some prop up of the economy. There's going to be certain things that are done because most people, unlike you, of course, because you're here at the Financial Mirror and you're watching this episode or listening to this on a podcast, but most people don't see these things. They see the effects, right? So as we talk about this oil reserve and what does that mean? Like people don't know that happened and they just see the effects. So what does all that mean? Let's dive into that and let's take a look at kind of what you can expect moving forward. So First thing I wanted to pull up, just show you, this is just an article from the New York Post, but Biden sell off 1 million barrels of gasoline held in the reserve to keep prices low before election. This is a huge deal, right? But, you know, this is where I talk about, like, this is going to happen, and it's one of those things that it happens, and then, like I said, most people don't know that it happened, and all of a sudden, we are just having a conversation about why the gas prices are low, right? Like, all of a sudden, people just see the gas prices low, and they're like, well, I mean, that's great, right? Like, the gas prices are going down. You know, something must be going great. Not so fast there, Junior. Listen, here's the thing. When you pump more, you take gas that has not from private party or from the government's reserves, and you pump that into the private industry, right? Of course, if you sell it to them at a discounted rate, they can drop prices of gas, right? But that doesn't mean that gas is actually cheaper. Right? If I give everybody in the country $300 stimulus check because COVID hit, that doesn't mean that everybody's rich again, right? Everybody doesn't mean everybody's rich. It doesn't mean that everybody has a lot of money. It just means that I've now given you a little extra cash, and you probably have a little bit more to stretch out a little longer, right? But the price per gas is not changing. We just kind of like artificially pumped a lot of extra like reserve gas into the market, and we're just going to help drive costs down. The big piece is that 100 barrels of reserve gas supplies are going to be pumped into the economy and bring gas prices down. Now, what is like if this was the first time, I would be here to tell you, you know, it kind of fits the mold, right? Like if we have a gas shortage, like normally when prices are up, that means that there is more demand and less supply, right? So prices are going to increase. So, you know, like if that was the case, I would take this as, yeah, like we probably just have an issue and we need to pull it out of the reserves. But the problem here is that we saw this again in 2022. And it just happened to be right before the midterms. So I can't help but think that this is becoming a common trend. But back then, the Biden administration released 15 million barrels from the fuel reserves to drive prices down. That was right before the midterms. So, like I said, most people don't have an idea that this is what is happening, that this is how gas prices are actually falling. They just see the gas prices falling, and they're like, oh, well, the economy must be doing pretty good, right? The gas prices are coming down, right? But they're overpaying on eggs and milk and bacon and all the good stuff that they need to fuel their body, not just their cars, right? So that's what we are running into right now, is that this is going to be an influx of a very artificial change in price of gas, and it's going to make most people feel like economy's good, but not you, because you know that this is very artificially changed prices, and it's nothing that you should get your hopes up about. As soon as that quantity sells off and these private industries go back to, you know, actually having to drill and get gas and get oil into America, to the gas pump and into your car, once they actually have to go through that whole process, prices will go back up. Right now, averaging prices are around $3.60 per gallon. That's kind of down just a little bit, but we could see that to go down a little bit more over the next few weeks and months, just for the simple fact that million release will start to change prices. It will. It will. I'm not saying that it just is kind of, like I said, deja vu-ish, that right before midterms in 2022, this happened, and then it happened again right on this election year, right as we're going into the presidential election. So all of that to say, don't let this one little, sly card trick fool you. That is not this gas price thing is not a direct indicator of how the economy is doing, but more importantly, some of these other things could probably give you a better feeling for how the economy is doing. So, let's jump into that. Let's look at, I want to go over kind of just giving you an overview of what is the overall state of the economy. Well, if I have to be honest, like I pulled up this chart because this is directly from the Bureau of Labor Statistics, and this is the Consumer Price Index, and I am keeping it at all categories. We've seen GDP growth go up a little bit in the first quarter of 2024, up 1.6%. We've seen April unemployment rate is like 3.9%. We've seen wage growth slightly kind of going up just a little bit. We're kind of in like this I'm going to say stagnant place, but let's not blow up this stagflation thing. Like, I'm just saying stagnant. Like, it's just kind of like, it's moving in the right direction. But the thing is that it never really corrected itself from an inflation perspective. So year over year inflation rate as of April 2024, we can see right here is 3.4% if you take all items included, right? All items included, 3.4%. Now, that is one of those things where it's good to see that. It's good to see that, but what I want you to realize, if you've never looked at this chart, this is a great chart to go off of, because this is a reflection. Like, if we look right here, May 2020 kind of like shot up. Like, we were doing pretty good all around this November 2019 kind of. COVID happened, and this all, just boomed. Got up as high June 2022, inflation up around 9.1%. But you can see that pre-COVID, we were down around like that 2% mark, which is the current goal of the Federal Reserve. Like, they want the target inflation to be about 2%. So to be sitting at 3.4, still a little high, still kind of in like I said, in this like steady state place. I don't like saying stagnant, because people think, oh, stagflation. But this is a good chart, because if you look at it, we can drill down and not say all items, but let's just say food, right? We can see here that food is kind of sitting around the same place that it has been, right? That 4-ish%, and right now around 2%. Pre-COVID, we were around like 2%. So like, food from this chart, it seems to be kind of in a good place. Food at home seems to be kind of in that normal, like pre-COVID like range, like that we were sitting at. Food away from home is more of your restaurants. That has expedited quite a bit. So 4.1% there. Pre-COVID, we were around 3%. So up about a full percent for food away from home. Gasoline, once again, this kind of goes all over the place. Not a good place not really a good chart to look at, but you can see that this is one of the charts that a lot of people like to use, is the all items less food and energy. But around 3.6% there pre-COVID, and this kind of what this gray bar indicates pre-COVID. This is the 2008 financial like housing crisis deal right here. But these little gray parts show represent a recession, right? So determined by the National Bureau of Economic Research. So pre-COVID, all items less food or energy was around 2%, and right now we're sitting about 3.6. So all that's to say that we're kind of in this like weird spot, right? Like, we're kind of in this spot where it's not that the economy is technically like bad, for instance. But it's just in this weird place where it's not really getting like much better or worse. It's just moving sideways right now. So I can't say that right now what I would be looking at is really paying attention, and we've talked about this previously, but really paying attention to gross domestic product, GDP, looking at that to continue to grow. I'm looking at what is the overall stock market doing, and I'm going to show you kind of where we're at right now. And the other thing I'm looking at is, where are our mortgage rates? Like, where are our like interest rates? Like, mortgage rates and interest rates are kind of different, of course, but they play hand in hand for the most part. As one shifts, the other shifts, right? Because just the how expensive it is to borrow money. So they kind of shift together, but mortgage rates are something that a lot of people are interested in. And it's just something that I think is people pay close attention to mortgage rates. They update fairly often. You can see them daily, but all in all, there's slight changes daily, like slight deviations daily. But all in all, it's just a good way to look at that. And if I'm honest, like we are in a weird spot with that. Like when we look at mortgage rates, we're in a weird spot, and that's all because of the amount of like what the housing market did during COVID really changed kind of the temperature around home buying, and there was a lot of changes there. Let's just say that. And this is an episode on real estate, so I'm not going to dive too much into it, but I would be paying attention to these mortgage rates over the next few months. I'd pay attention to the Federal Reserve rates. Kind of, they're sitting around that 5.5%. They've been bouncing around 5.2%, 25%, 5.5%. Just bouncing around there. But I would be looking at that. I would be watching those. I'd be watching these mortgage rates. If you think if you missed this was kind of like one of those all-time lows of interest rates. So if you think you're going to sit around and not buy a house until interest rates get back to 2.96%, you could be waiting a while. You might your new home might be a casket before this happens, if I'm totally honest. And that's kind of dark, I guess, but you can see this is 30 years and we have not seen 2.96 in 30 years. So I would tell you that that's a long stretch. I think if you got that rate, excellent, good for you. But that's not something I would be waiting. If you're waiting to purchase a home, it's not something I'd be waiting on. But anyways, that's something I would be looking at. There's tons of mixed signals all around when it comes to interest rates, but all in all, that's a good kind of, point to look at to see like, hey, like what's happening? Is it becoming more or less expensive to borrow money? That type of thing. Cause that means a lot to kind of sentiment around the market. Like that's a good indicator of like where a driver of sentiment, even more important. So we're kind of seeing mixed signals. You kind of see some confidence swaying, to the positive and negative. There's a lot of pieces here, right? There's a lot of pieces, but overall, I would tell you that for the most part, I think the market is kind of in this like steady state place. Do I think that it has gotten back to a like pre-pandemic set of like normal? I don't think that we've gotten there, but we did so much to the economy. If I'm totally honest, we did so much to the economy during that little stint of COVID for like the first 2 years ish. We did so much damage to the economy that this could be like a normal spot to be in, right? Like this pullback of inflation and all that and kind of flatlining, this could be like a good point of like kind of let's see where we're at, right? Like let's see where we're at. However, we do this overall goal of getting back to 2%, which is what the Federal Reserve is aiming for with inflation. That is something that we need to be striving for. We do need to try to get back to that level. It's just, like the conversation has consistently been like, how do we do that softly? Like, how do we land this softly? But we stirred up the market a lot during COVID, and I just want to tell you that they were by steady stating, like it's not a terrible thing. It's not scary. People are not like scared. People are still spending money, maybe not as much, kind of cooling off a little bit. But all in all, kind of we're in a better place right now than we were last year. Like things are looking slightly better right now than they were last year. If we go off the data. Now, we have to always question the data because of the fact that this is an election year, right? They say so. These are all government entities, and I'm telling you that numbers can be kind of skewed just a little bit. However, it's still a good reflection of kind of where we're headed or where we're going. Okay. The other piece I did want to show before I kind of move into what does all this mean for you, because I do want to cover that and then and sort of wrap this episode up. The other thing I want to talk about was the stock market. It's just a good thing to look at if you don't look at it often. This is a like zoomed out right here. I just wanted to show you kind of from 1980. We're at literally an all-time high for the markets. This whole area right here was this like quick pullback from COVID, kind of boomed right around here. And then right around this area was where things really started to pull back. We've recovered a lot since then. But markets are looking, fairly healthy. We've definitely had a big pullback around December 2021 all the way into October 2022. So almost a 12-month pullback in the market, and over the past from October 2022 until May 2024, we've really put in we've put in an all-time high in the market. So there's another little pullback right here around the beginning of end of 2023, around that October timeframe. But all in all, kind of in a good spot in the market, right? May see either some consolidation right here, start moving in that sideways pattern, just moving in this way. This is a pretty bullish move up. This could pull back a little bit, maybe pulling back to this 48.13 area or something of that nature. But all in all, the market is looking healthy, right? Like it's not looking great. It's not looking terrible. All-time highs is always a good thing, but, or a new high, right? But that's always a good thing, but, not looking terrible, not looking, great. Just kind of like, it's just going, right? Like, so it could pull back, it could not, but all in all, what does this mean for you? So I've talked a lot about it. I've discussed kind of the market's moving sideways. The market is the inflation is pulled back. Like we're kind of at 3.4%, 3.6%, whatever you want to look at. What does all this mean? Well, obviously the first thing I talked about was gas prices. So you could see some temporary relief at the pumps. Just know that this is a short-term relief. This is not long-term, and you could expect shortly after that July 4th, going into August, you could see prices start to creep back up moving into the election. So keep that in mind. The other thing to just really be on the lookout for is that inflation. I'll put a link to the chart in the description. That's a really good chart if you just don't know how to keep up with inflation and like where it's at and how it's looking. It's a great chart to go and look at, and just it updates monthly. So you only need to look at it once every 30 days. It's not something you monitor like a whole lot, but you can just get an eye for where inflation is at. But stay informed about the trends with inflation. That is a true effect on your purchasing power. So that is a direct reflection of your purchasing power. How much money, how far is your dollar going to go that you're earning? That is a reflection of that inflation number. Like I said, look at the interest rates, look at the stock market, see how that's doing. Those are all good sentiments around what is the overall confidence and direction and all those things. But I do know that the Federal Reserve continues to look at and monitor all these economic indicators and are deciding on when and how much to cut rates. But all that impacts loans, credit cards, mortgages, all those things, and just the cost of borrowing money. So just keep that on the lookout, because all of that whole package I just talked about drives consumer confidence. Consumer confidence is the driver of the market, right? Like how much this economy can bring in is driven by consumer confidence. If people are not confident, they stop, they hoard, they stop spending, they hoard, they save, they put money in CDs and savings accounts and all these other low risk investment areas. When people are confident in the market, they're going out, they're purchasing their house, they're purchasing new vehicles. They're going out and they're spending money on groceries. They're spending money on consumer items. They're like retail items. They're going out. They're doing all these things. They're doing things where that they have to borrow money. They're doing things that they are spending money. Right. That shows consumer confidence. And when people are confident, it drives it drives more production, right? So we want that healthy balance of like people are not overly confident like COVID, and it just drives inflation through the roof with all this extra money, but we do want people to have some confidence in the market, because you have a bunch of people sitting on their hands and not spending money and not doing anything. That's also not a good thing. So I would say our current economic situation does show like some easing in inflation. It does show, like I said, the all-time highs in the stock market. It does show some changing in Federal Reserve interest rates, things like that. But we do have some financial challenges ahead of us, especially as we move into an election year, just for the simple fact that we could see some other super drastic changes anytime that there is a huge bill that goes out that it puts money where the federal government is spending more money, kind of going back to the national debt crisis conversation we had. That is and last week, sorry, I did say last week again. Last week we had that episode, that conversation. That does change consumer confidence. When the government's just spending money, it does change consumer confidence. So that is something that we do want to be on the lookout for. But more importantly, just keep an eye on the things that we've discussed today, because that is going to help you determine over time for yourself, like, where's the economy? Right now, I'm not in like a panic mode. I'm not in like a this is awesome mode. I'm just kind of like going with the flow, because right now, continue to invest, continue to put money into your retirement, continue to work on building wealth. If you're in debt, work on paying down that debt right now. Another good time to be working on that. But all of those things, just like right now is a good time just to put some real solid structure around your personal finances, for the simple fact that there's just like the market's just kind of like moving sideways. Like if you can't put as much into an investment, and you can kind of really focus on like honing your financial like basic foundational skills, totally awesome time to do it. If you're in debt, like that's if you're not investing, you probably shouldn't be investing if you're in debt, but right now is a really good time to pay all that off. So like I said, just hang in there. Economy's not terrible. It's kind of just moving sideways. Focus on the foundations and you will be fine. Now, if you need a little help on any of that personal finance, getting set up, paying off debt, getting invested, all those things, you can get a financial coach, and I can be your financial coach. Just head over to thefinancialmirror.org and hit book now in the middle of the screen and schedule a free consultation. We'll meet up. We'll decide if a financial coach is right for you. And if it is, we will get you on a package that works for your financial goals. If you do want to give an extra dose of support to the stream, head over to thefinancialmirror.org/shop. Pick you up some awesome Financial Mirror gear. Truly hope you got something out of this episode. Truly hope you feel a little bit better. Maybe if you felt really good, maybe I've took you in the other direction and said, maybe you shouldn't feel so good. Now, hopefully you got something out of this episode. And if you did, don't forget to like and comment on the episode. Share it with your friends, family members, coworkers. If you are listening on the podcast platform of your choice, don't forget to subscribe and leave a 5-star review and a written comment. Both go a long way. Till next week, continue improving the one thing you can control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.